Hi guys, this is Lee with the Market Sense for the week of September 17th, 2019. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And looking at a weekly bond market chart here, we had a nice exhaustion bar here. At least that's what I call them. Whenever you get a bar that's kind of like bigger than most of what you see on a chart and it seems like it just opens near the high and closes right near the low, oftentimes that means that they've basically run out of sellers at that point. Anybody who wanted to sell did, and they've just kind of exhausted themselves and they start back up, which seems to be the case so far this week. There's certainly a possibility that they could get down here. Let's call this mid-Keltner channel 156.08. It matches up very nicely to this swing high here that they broke out from. And I think you probably got to give them almost a full point. The projected low is 55.10. So from 156.08 to 55.08 or so, you've got this area here that could very well be the low if they go down there. But they don't have to go down at all. And that's the problem with these exhaustion bars. They often just reverse and go back up. The highest probability is for them to reach this 161.20 area, the lower moving average. And if they should get there, having gone no lower as they are so far, then that is potentially resistance. They could possibly turn back from there and then continue. This could be the beginning of a trend down. And if so, that's the area it should probably continue from. Now, I'm not predicting that. In fact, I'm not predicting anything because we do have a Fed meeting this week. I think everyone pretty much expects a quarter-point interest rate cut. But there's probably a whole lot more concern about what the Fed says than what they do. Some people think there's going to be 75 basis points more before the end of the year. Some people think there will be no more for the year. So what the Fed says going forward, what they see in the future, is probably more important than exactly what they do Wednesday afternoon. But that's going to be a market moving event, I would think, and it's really, really difficult to know what might happen to any of these areas once that announcement comes out. And in stocks, you can almost see the nervousness as they wait for the news to come out. They've been very quiet so far this week. Volatility had shrunk fairly good last week, but they've been exceptionally quiet so far this week and may continue to be until we get that announcement Wednesday afternoon. The upside target is kind of interesting here. That projected high is 30.37. Now that would put them at new highs. Previous high here is 30.31 and change. Kind of a marginal new high. I would not be selling it up there. However, I would be willing to watch them, and if they stall in that area, especially at a marginal new high like that, and then turn back down, I'd be willing to go to lower time frame charts and look for a reason to get short on them. Again, I don't want to predict that high. Not gonna jump in front of anything like that. It's new all-time highs. It's just not a smart thing to sell. But if they turn down from there, I might be willing to chase them a little bit if I can see something to sell on a lower time period. The best support is down here around 29.50. There's also an area down here which is like 28.85. They could be there in a heartbeat if they don't like what they hear from the Fed. The Fed will be the big market mover here as well. I don't know. I don't know what to expect from the Fed. But I will say 28.85 is very possible, if not lower. But I'm really more interested in seeing what happens if they go up, because obviously for the last couple of weeks they have looked like they want to go up. And if they can continue after the Fed and do more than this marginal new high, then we might really be off to the races. But you got to watch out for that potential marginal new high. And of course, you got to wait and see what the reaction is to the Fed. So that's what we've got for you today. I hope you can find something profitable to